This conference will now be recorded.
All right, so welcome to Level 3, Lesson 5. As always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. Andy, where you at?
Good morning
Good morning.
or evening as it is here from across the pond.
All right, so what do you want to get started with?
So initially this morning I was looking at QS.
Okay.
I couldn't get short shares on it originally, unfortunately, so I was kind of waiting to see if a number 4 developed out of those aspirants that we had at 110.
Okay.
But that all has changed with PTON. Rich calling that out. I've been keeping an eye on it since this morning. Obviously, the setup is pretty ideal. I mean, we jumped
Yeah.
up. We
Yes.
jumped up 16, almost 17, maybe even $18. Right? Is that math
Yeah.
right?
I mean,
Think
you're
it's
talking
yeah,
about almost 19, somewhere
yeah.
in that range. Yep.
Obviously, 161 was huge over any kind of print personality. Even holds more weight just because of how thin it trades, and we're in the pre-market right now, so there's not really those kind of orders out there.
What also held a ton of weight as well. There's something else there too that's a big variable that comes into it.
Uh,
What's
Gap
160?
160 is a huge psychological level, so to
Uh-huh.
buy it like that right over the top of a psych
Eh,
level,
it's hard to hold, right?
yeah,
So when you have it right, a dollar. So a dollar in this stock is a dollar much
yeah, no, not at all.
for yeah, exactly. For us, a dollar's always going to be a lot. Okay, but for the scheme of how this stock moves, a dollar's nothing, especially after it moves up 19 bucks. So
Yeah,
when we look at this and we have that psychological level underneath, and we get something, I'm going to tell you something right now. Okay, when
even
I
bigger
trade,
in my eyes is it jumped right past 150, and I don't even has it ever hit 150? So I mean that's
I
like
don't believe so, which is
to
another.
just blow past 150 like that is pretty unheard of.
That's an incredible variable that we add that goes into there. But I'm going to tell you something. When I trade, when I see something like this that's just so absurdly out of character, that's immediately what I go to. I don't care what I'm doing. I'll take off a trade to be ready for something like this because this is a monster. You have
Yeah.
something at 161. I mean, it's just so out of, and just look at what's happening afterwards. No trading whatsoever. So we're moving down, obviously, as we know. And now, what's the only trading that we've seen since then?
Yeah, so that's kind of what I wanted to you brought up the looking at refreshing on the ask at 161, which I didn't really see so much. Um,
So the
I
thing
mean,
about, so I was
the
looking
problem
for
is
it.
it's so
There
thin
was
that it's
refreshing, but
yeah,
it
so
wasn't
you're only really going
trading.
to see it on yeah. So my real question is, how would refreshing at that point change your opinion or your percentages on their intentions with this stock? Because I mean, we consider refreshing as them just readjusting their um, position or their inventory. So if they're refreshing at 161, that just means that they're locking in a new price of 161.
So is refreshing them readjusting, or is a big order them readjusting? See, refreshing could happen with 5,000 shares. It doesn't need to be a huge order. There's a big difference between them putting 150,000 out there and hitting that order to readjust a position as them going into refreshing. Do you understand? So refreshing is not the same exact thing. What they're doing when they're refreshing in that stock is they're trying to hide it to a certain extent. So what happens is they're continuously keeping the stock down at that point because they want to keep getting there and there. So what does that tell us about the time frame of this pullback?
Well, to see them refreshing on the ask like that,
Mhm.
uh, I mean, you would expect the pullback not to be as big just because they're built trying to build as quick as possible at
So
that
remember,
price.
the number of the pullback isn't going to change. right here, what's really the lowest that we could have went to? Obviously 160, but 157.50 is really where this needs to go.
Mm-hmm.
But the time frame, we're talking about how quickly can we expect it to come back, is going to be a lot quicker now. Because if they're refreshing at 161, what does that tell us? Well, it's coming closer to money time. They're trying to get those shares in and keep the stock lower at that point. What's the only reason to keep a stock low at this moment when you know it needs to go up?
Because you're trying to gather as much as you can before it takes off.
Exactly. But at the same time, if the stock was going to pull back for, let's say, 2 days, would they need to refresh there?
No, because they would have plenty of time to build.
So now when we look at personality of that, the personality of refreshing, it tells us that our expectations for this pullback have to be a lot shorter than they would have been if that didn't happen. If we just got a real nice big burst on a nice big order, guess what? We know, we're pretty much going to have a day towards that downside. But because they come in and they refresh that 161, it's telling us that the time frame is a lot shorter. Otherwise, they wouldn't have to do it.
Yeah.
See what I'm saying? So this short trade, no matter what, it was a short trade. We're going to have to look as the market opens, where it's very important to understand what that initial money flow is going to be into it. Because
Right.
I wouldn't be, again.
Well, the one thing that I was watching for was you never really saw anyone come in to write it down. I mean, we're getting a little bit of selling now, but considering the size of those aspirants, you would expect a pretty substantial pullback, which means that somebody's going to make money on that. So you would expect to see some pretty decent riders taking that down.
You would. But based off the orders, for the most part, where's most of what you're going to see come from?
On the smaller time and sales, which, I mean, we did get, or unfiltered, not smaller, but unfiltered time and sales, which I will say we did get some pretty decent sell bursts over there shortly after those prints. It's just, I mean, it's thin, it's the pre-market, the orders aren't really there. So, I mean, that first bar in the morning is going to tell us a lot on what they plan on doing with the rest of the day, I would think.
I agree 100%. Let's just hit some questions real quick. If they don't want to show the movement, I think time frame would get quicker. Yes, point. So if this was 160, would we 100% take this long-term time frame? Well, no matter what, when we look, it doesn't matter if it's 161, 160, at whatever number you want to make up. When we see this, is this longer-term time frame or shorter-term?
Longer.
Yeah, it's just, that's what it is. But when we add that new variable that comes in of the refreshing at 161, we know the move needs to be big towards that downside. But we also know that big and time frame, do they really have anything to do with each other?
Yeah, I guess that's
technically
kind
this
of
could just bar down to 155 and then start coming back up, can't it?
yeah, or even lower. I mean, really, with the size of that position, but like you said, I mean, you would have to separate those from when they plan on building off of that long term versus what their intentions are now with, I mean, that refreshing, shortening the time frame. You're not going to expect them to pull this back down to 150 and build there.
So why not? Because even though it's a shorter term time frame, they have all day, don't they?
True. Yes.
So why not? Why not? Could they spend an hour bringing this thing down to 150?
Yeah, just scare the crap out of retail.
You know what I'm saying?
Yeah.
Every single retail trader that was in the stock is going to get out of it now.
Yeah. Plus, I mean, if I was holding something and it jumped $18, I think that I'd see some selling anyway,
No,
like,
guaranteed. There's no question. That's why this right here, even though it's ballsy no matter what, just because of how big it is, but when a stock jumps that much and you see that immediate buying like this come in, that's a huge deal. The personality of us, so we got to think the personality today is a stock that jumped huge. And then when it jumped huge, someone came in and bought huge, which is, that's crazy.
Plus, we know it's going to be, I mean, obviously it's already an exception, but then also putting in the puzzle of the volume. I mean, we're already over average volume for the day and we haven't even opened yet. So,
And so what does that say about this average right here?
I'm not looking at your
Your
screen.
range, your
Oh,
range.
range. Yeah, range is going to be huge.
Yeah, we can expect. So would it be that crazy for the puzzle that shows the puzzle it's showing right now? Would it be that crazy to pull down to 150 and then come all the way back up?
That would probably be ideal, actually.
No, 100%, right? It wouldn't shock us.
Just hammer them down, steal all their shares, and then run it up and bring them all back in.
Mm-hmm. Okay. Or the other part, because of that refreshing, and we know it's an exception, what's the other counterpart that could happen? That isn't the highest percentage, but it's still a possibility we have to be ready for.
Pop it up fast, bring retail in, and then bring it back down.
Kind of like exactly what just happened.
Yeah.
And one of the best parts of that is when it pops over, you're popping over a psychological level. So it gives you that same thing that you had up here that shows us 160 is a hard level to hold. It gives us that same exact ability again, because now we're above 160. They popped it in. Everyone feels warm and cuddly. This is the best trade in the world. I'm buying extra presents.
Yeah, I just lost all my presents.
Pretty much we got to return everything. I hate putting it that way, but it resonates. Imagine
Yeah.
that. That's honestly, you have to realize something when you're thinking through retail minds. That's like a reality. That's not a joke. That happens. The mortgage. Oh, we can pay the mortgage this month, and then boom, can't pay the mortgage.
Right. So that I always I guess in my mind, when we're talking about thinking in the mind of retail, you always talk about that guy sitting at his kitchen table. I'm trading this, by the way. I'm not even gonna lie to you. I clicked the button.
You son of a bitch. First of all, I should be trading. You get the fuck out of here. Excuse my language, but
I muted my speaker so you wouldn't hear the order.
I can't blame you at all, you son of a bitch. I mean, not for nothing. I would have lost respect for you if you didn't. I mean, come on. This was just too. When you guys, I told you before, when I see something like that, whatever I'm doing, I drop it. When I stutter sometimes, I'm not stuttering because it's just because I'm not paying attention to what I'm talking about. I can't blame you. I mean, look at this thing. It's just, you want to talk about a Christmas present? Like, Jesus, this is a Christmas present.
So, all right, now that I covered. All right, let me talk. All right, so about retail. So you talk a lot about retail and thinking about that guy that's just sitting at the dining room table, clicking away or whatever. And my curiosity is I can't imagine. I mean, I'm sure there are a lot of them. Obviously, there's a lot of them out there. But what I don't understand is with that, there's not that many people out there doing that to generate the kind of volume that I would think you would need to make some of these moves that we see. And
so how many retail traders do you think there are?
I mean, there's thousands out there.
No. Try again.
No.
7 billion people in the world, give or take.
Right.
There's millions.
Mm-hmm.
So millions of them, what percentage do you think are looking at, right this second, looking at CNBC?
Most of them.
Most of them. Is PTON, do you think PTON went on CNBC today after it jumped $20 this morning?
Probably.
Okay, so out of the millions that are out there, how many are focused on PTON? What percentage would you think?
The majority, 90% of them.
Yeah, I think that might be a little bit high, but safe to say 70?
Yeah.
About 70%. So 70% of millions of people, if they all bought 100 shares, what's the volume bar look like?
Huge.
Yeah. So Ken.
But then back to that is a lot of those are not direct. What is it? Direct
execution.
Direct execution. They're going through brokers.
Yes.
So how are we seeing all that volume immediately if their brokers aren't necessarily executing it immediately for them?
Okay, our assumption, that's an absolutely phenomenal question. Our assumption is within 2.5 minutes, every single person that put an order in overnight is executed. 2.5 minutes. Very specific question, but that's how I operate. After 2.5 minutes, I assume that everyone is done with what they need.
Okay. Now I'm talking.
Where's that number come from? Before we just, where's that number come from? Why do you think I say 2.5 minutes?
I got nothing. That's a random number.
Okay, for the most part, when a stock, let's say we know a stock needs to go down. Okay, for the most part, is it going to go up for more than 2.5 minutes before it comes down, if the down move is the correct move?
Probably not. That's why we always look at 3 bars.
Exactly. So at that point, that's why I use 2.5 minutes. Son of a bitch. Look at this trade, guys. I mean, come on. 155. Oh, God. You better not have taken it long. I hear you clicking. Stop clicking.
I'm scanning. I was clicking the scan button.
Yeah, I'm sure. Yeah. Then until order filled it's put in the background. But okay, can we talk about something real quick? That's very important. Yeah. Okay. This was a phenomenal move. When we talked about time frame, the prints on a pullback, they give us a time frame, but the number, let's say it's longer term. If the number gets hit at 155 in 1 second, does it need to be longer in time?
Like, do they need more time to build is what you're asking?
So when we saw 161, okay, we didn't think, well, that's going to take about a half hour, right? What we thought was it needs to go down to this certain point, because that's a number where they typically would bring it, that they've been able to build enough. Then we saw refreshing at 161, because this stock, if we didn't see refreshing there, we could have expected this to just keep going down forever. But we talked about a shorter time frame. So the differentiating where it needs to go to pull back versus time. If a stock needs to go down to 155, it happens in a minute. That's, oh, you son of a bitch. You know how much money I lose teaching you guys this stuff? Oh, it's unbelievable. But anyway.
It's not about the money, Rich.
No, it's not about, obviously it's not about the money. But we have to understand something. When we saw those prints at 161, that didn't mean that we need it to, until 10:30, we can't take a trade. It means it needs to get down to a certain number. The time frame within that is determined by something else. We need a different variable to actually determine that. That refreshing at 161 told us that this move down was going to be quick, because why would they refresh at 161? This exact lesson. I mean, the chart did exactly what we talked about.
Because they weren't expecting it to be down for long. They were just
exactly.
If they were going to take it all the way back down, and I mean, we joke about it, but if they were going to fill the gap, then there was no need to refresh right there. They could just build the whole way down.
Absolutely, because guess who refreshes? The people, the market makers. They know what's going to happen. So by them showing us refreshing at that 161 point, it showed us that we still need to come down. It still needs to follow the rules, which it did. But the time frame was going to be short. And then look at this. So even if you're like, oh, shit, I missed this easy pullback trade, what number was coming in quick? Was going to come in quick?
155, huge psych level, major level.
We had number 4 trade.
Oh,
you're absolutely right with what you were saying.
4 off of that.
A number 4 trade, right?
Yeah.
But do you see how understanding what its personality was, what these variables that we add into it tells us everything that's going to happen? Everything. When you take that short trade, Andy, you said you covered, and the reason that you covered was because the bar came up above a certain point. I can guarantee you that, just based off the way that, I've taught you. Okay, yeah. But that was a smart move, because the second that this started coming back up, once it got to, so when I say 155, okay, 155 in our morning meeting, and I'll post the morning meeting just so everyone can go over it. Okay, is 155.50 in a stock that's going to have the range that it has an acceptable spot?
Yes, absolutely.
Hell yes, right? And then we have a refreshing there. So the second that this pulls up like that, what type of trade technically is it now?
A 4.
So you are nonchalantly getting out of a stock at the perfect time. Because you know we have that quick, the refreshing that's sitting there. There's quick. It's going to be quick. So the second you start to see it pull up like that, I mean, that was a phenomenal trade, not paying attention.
Who wasn't paying attention?
Well, I mean, when I say not paying attention, I mean you're bullshitting talking to me while you were clicking.
That's all you think of me?
No, I think you just made a lot of money on a great trade. I think you did everything perfectly, but I want you to realize that this gets duplicated all the time. Now, do we always get one of these gifts in pre-market? No. If that happened every single day, guys, I'd be a billionaire by now. Guarantee you. But at the same time, I mean, look at this thing go. You notice how not many people are talking right now during class either? Because I guarantee they're doing the same thing.
That's fine. Just, I'll leave my address. They can forward the commission checks. But yeah, so back to the retail question. I'm sorry. So now we talked about you would expect them, all their executions to be done in 2.5 minutes. Now you're not just talking about 2.5 minutes during the day. You're talking about 2.5 minutes. I mean, 2.5 minutes open. You mean?
Yes, from 9:30 to 9:30 to 30.
Okay, so then I'm talking about like retail during, we're at lunch or the afternoon, not necessarily the afternoons, because that is the brokers filling their orders. But I'm saying like, sometimes we get those nice lunchtime trades where it's like 12, 12:30. I don't understand how the retail that's not direct execution is coming into play to generate that kind of volume on those triggers and those releases.
Because out of the millions, there's probably about 20% that still do have direct execution. Okay. And now, it's becoming an increasingly different world. When I first started trading, guys, to have direct execution was a big deal. Right now, you have these commercials with Robinhood and this. The world's becoming more educated. So the more educated the world gets, the better they're going to be situated. They're going to figure out ways to be better off, to be in the, a situation of being able to be successful. Robinhood, there might be somebody that's like, oh, I don't have to pay commission fees, and they might switch from Schwab to Robinhood or whatever it is. But there's more and more people that are increasingly coming in. And you have to think about something is the market maker doesn't need a lot because they're blending it in. As they're putting these big shares, they're still helping. It's not so the way that you want to think of it. It's not that retail, like a market maker just says, okay, here's your trigger. Let me sit back and wait and let everything else happen. Okay, they're still helping and they're still helping pushing it, but it's that influx of the retail that brings that movement, and it continues that movement for them.
Gotcha.
You understand what I mean?
Yeah.
Because it's not all retail. It's not like the market makers just sit back and say, okay, retail's got this now. That's not what happens. It's that influx of retail. For instance, let's say I want to push a stock. This will be a good example. Say I want to push a stock and I'm going to need, I don't know, let's say 100,000 shares to do it. If I want to push it and give it, if I give it enough, so let's say I put my limit order high enough where I eat up all those orders, I probably only need about 60,000, and the rest of the 40,000 will come in from that price action. Do you know what I mean? So they're not using, right. It's not like retail's doing it all for them, but they don't need to do as much because they know if I click this button and put this order here, this amount of retail statistically has came in. That's why they pull stocks back. And they always want to test those levels that come in. Is because if they know there's a ton of retail right here, they know if I need 100,000 shares, I probably only need to move it with 30,000, and then the other 70,000 will come in. It's a calculation that they're making.
Yeah. And they
obviously they're. I'm sorry, go ahead.
I was just going to say, obviously they're good enough to know like what to expect based on. So for the most part, they don't need to know because when they did those orders at 161, when this stock jumped up,
Okay. Do you know how many pieces of, and I always think of it like this. Okay. Retail puts in orders, they get a piece of paper on their desk. So anyone ever see like a movie before where they have like the ingoing, outgoing baskets?
Yes.
And like, the joke here, like, oh, the ingoing, they finally finish the ingoing, put in the outgoing, and then all of a sudden a giant stack of paper comes. So I always think of it like that. There's a giant stack of paper of the incoming. Those are the numbers that came in. So when this stock jumped up, they had a bunch of people. They didn't have to execute until the market opens. So they know what the interest at 161 is already. They already know what percentage of people are going to be involved there. Do you know what I'm saying? They honestly, it's, the house always wins. The reason the house always wins is because it's set up that way. So they already know all the interest throughout this entire thing for what they were doing. They wanted to see, so let's say, there's really no volume. Oh, it would be real hard to understand, but it's not, because they know if they're not trading enough volume, they know what the amount of orders should come in on a stock that someone's interested in. So if it's only, let's say 30%, okay, compared to the 50 cent it's supposed to be, they know there's not a lot of interest there. But if it's supposed to be 30% and 50% comes in with interest there, now they know how to use that. They can determine, so let's say TradeStation. TradeStation, not everyone trades through TradeStation, right?
Correct.
Okay. But TradeStation has its own percentage of its users. So they can take that of what they know from their users and kind of apply it into the market from other brokers, because they know if I have this high of a percentage here, Schwab's going to have that, Thinkorswim's going to have that. All these other people are going to have that same type of interest. It's just basically they have to make those percent, and we're getting really involved in what they need to do, but that's how it works. They already know where people are going to be interested. Why do you think pullbacks are the greatest way to build? Because you could literally just bring the stock up to 164, build right here straight across, and keep going. When they pull back right now, they're going to see, okay, they already, when a stock goes up at 161, do they already know their interest? The interest of retail.
Yes.
Absolutely. Okay, it's been at 161 a million times. Okay, at 163, do they already know their interest of retail?
Yes.
Yeah, it happened. If it happened, they know the interest that's out there. So what's better than to know the interest and then pull it back? So they know, let's say there's 100% of people are interested at 161. Guess what's going to happen?
They're going to hammer them and
they're going to take all that money. That money. Now, if interest at 162 is what are they going to do? Are they going to pull it back, or are they going to let it keep going up?
Pull it back.
So first, what they would do is bring it up, because what does price action do to retail traders?
Draws them in.
It draws them in, right? It baits them in. So first, they're going to do that. Now, if that doesn't work, now they're bringing it all the way back down, because if 162, there wasn't that much interest. Guess what? If I bring it to 160, statistically, what's going to happen to the interest of retail? Is it going to go higher, or is it going to stay the same or go lower?
It should go up.
It should go up, because the lower the price, the better that people feel about getting into it, right?
Right, because they feel like they're getting a deal.
Exactly. It's it's that same thing. If you like it at 164, you gotta love it at 160.
Gotcha.
So that's why we get those pop moves first, and then the bring downs, is because it's what was the interest. Now we can use, remember, if you remember the workshop, we can always use, where's most of the retail in on PTON right now?
About halfway up, which
877, call it 9.
Yeah, so about 450 off of 155. So, call it 160.
Yep, somewhere right in this area, right?
159, 160.
Somewhere right about here. And how do we also know that? Look at the volume. See how the volume increased when we got here? It's because this was the market makers right here, 2.5 minutes. Okay, this technically was 3. After 2.5 minutes, they're done. And then you see how it starts moving up on the lower volume, and then boom, it gets hit. Because guess who's all interested now?
Retail.
On a day like today, let's talk about personality of market makers. On a day like today, Are they okay with retail making money in PTON?
Yes.
They are. So what does that tell us about our trades? What are our best trades going to be?
With the prints.
With the prints, absolutely. See how we can decipher that just based off of what happened?
Yes.
Okay, those 161 level, did they anything up here? They might have taken off a little bit, but did they have they made their money even close yet?
No way.
No, not a chance. So you might say range is over. Well, guess what? I don't care about range because is this gonna break average volume based off its
Absolutely.
personality? Oh, not even a question, right? I mean, it's guaranteed to break it going off. So today, is this going to be an exception or is it going to follow the rules?
Statistically, it's going to be an exception.
Statistically, but it's following the rules pretty damn well, isn't it?
So far, yes.
Okay, but we have to understand there's going to be multiple levels of every trade we take. We have to understand there's going to be multiple levels of exception before it makes a drastic move. Today, for them, it makes a lot more sense to take all the money at once rather than try to take money at each level because of how hot the stock is. You know, this isn't going to be the type of stock that hits 163, pulls back a little bit, then goes back up. It's not going to hit 164 and pulls back a little bit, then just keeps going up. This is going to be a day full of big bars and big up movement based off of everything that we could decipher here. But what was the key point this morning to understanding everything? There was one variable that changed the
refreshing is what really changed our expectations.
But it gave us a time frame.
Yeah.
And that's
because just looking at the prints, you would think, oh, this is going to be a huge pullback.
Forever.
You know, you're looking for a number one because they got a lot of room to make up there. But the refreshing, that's why I asked about the refreshing, because now that completely changes your expectations for what's going to happen.
So there's things that give us expectation on movement, and there's things that give us expectations on time frames. Okay, when we saw those 161 prints, and I hope it lets me go back.
I don't want to take you off a track, but I do just want to clarify what you were saying about, even though it's playing by the rules well now, we're still going to get those big bars. But I thought we had just discussed that the big bars were if they're not getting that kind of retail interest, but we just proved that there's a ton of retail interest in this right now.
Yes, but there's a ton of retail interest in it right now, but is there at every level? Is retail all going to be just as interested at 163.50 as they are at 162.50?
No.
There's different levels of interest. So what's going to happen, let's say everyone's just happily giving away their money as you know, as the stock pulls back. That's fine. So then we're just going to see it act as an exception and continue up. You have to understand, there's a huge influx of retail. We know that. That's guaranteed. But the huge influx of retail isn't going to be interested at every level. So what happens is that they'll bring it up. If let's say it's 160, then it goes to 161. Interest isn't really there yet. Let's bring it to 162. Interest isn't really there yet. Okay. What's going to happen is all of the small people that came in there drop it under 160. Take all that money. Now let's try again at 158. 158, the retail interest should be higher than 150. So there's going to be a lot of levels. Basically, what I mean by this is there's going to be a lot of levels. It just pushes past. We're going to see it just go from 163 to 168 with no problem.
Well, that's what my follow-up question was going to say is, I mean, you can kind of see just based off of what's happened so far, it almost seems like they're setting up for 165 being a big psych level. The way that they're playing games underneath. And, you know, this, I mean, it's a big consolidation, a couple of dollars, but it's still, they're consolidating underneath there.
So I'm going to teach you how to think like a market maker for a second. 164.50. Okay, let's say there's 100% retail. What percentage of retail is going to be interested at 164.50? Just give or take, a roundabout.
30%.
Let's say 30%. Why? And 30% I think is way too high. Why is 30% way too high?
just because they know that they have that huge resistance level above it right now, and they
160.
haven't broken it yet.
Okay, so let's call it 15%, because that's the 15% of people that don't understand what support and resistance are. Now, if there's 15% that are interested at 164.50, if I bring this up over 165, what happens to that percentage, statistically speaking? And I guarantee it, I'm watching it happen.
I'd say at least triples.
Yeah, we're gonna be up. Let's call it 40, because
Yeah,
50% of
45,
millions
yeah.
of people is a lot. It really is a lot. There's not, and we could look at the volume here. If the volume were in the millions, I could put that percentage up at 70. But it's it's on average trading 250,000. So out of those millions, I can't go over 50. You got to figure this about 40% compared to 15%, and that's by just bringing the stock up 50 cents. So now they get that 40% in here at 165. Okay, what do I want to do to that 40% as a market maker?
Hammer 'em?
Not yet. I want to get it as high as possible, don't I?
Oh, you want to bring more percentage in, so you want to jump it up just because they're like, oh man, we got a new support underneath.
Money, every life is great. Okay, has anyone ever thought about a stock that went from 165 to 200? And I'm just making up numbers. I've been like,
no, because I don't trade stocks that expensive.
Yeah, okay, well today you
I get
did.
what you're saying.
But if we go exactly that FOMO, if I would have got it at 165, I'd be fine. So if I bring this up to over 166, now that FOMO has got them buying. So I'm adding to that 40% percentage by making it go higher. Now, guys, I'm telling you something right now. We're getting really advanced, like to a point where you don't even need to be a good trader. You don't even need this. Okay, but I want you to, obviously, you asked a great question. I'm going to answer it. But do you see how I can add that percentage on certain levels by going up? So it might make sense if the percentage goes from 40 above 165, it only goes to 42% by bringing it to 166. It might make more sense to make the stock go up higher and add that percentage, add that percentage. What happens when I have 80%?
Hammer bar.
Hammer. Big giant bar that crushes them.
And I mean, you saw them setting up as soon as they went over 165. You saw them starting to sell off and set up.
100%. Because guess what? I don't know what their percentage was, but it was real high, wasn't it?
Yes.
They had a lot of people, especially you have a flag like this and it breaks out of consolidation. They probably went up to 40% just right here. Because when people see movement, they forget about support and resistance. Okay, all a trader wants in their life is to click a button and the stock to fly. That's what they want. So when they see a stock flying, guess what they try to do?
They try to hop on the train.
Exactly. They chase. They try to get to be part of that.
Usually end up under the wheels.
And market makers know all of this, all of it. That's why we see exceptions. We don't see every stock trade. Like, for instance, I'm going to go to fuel cell for a second, and I want you to just look at the way it's trading. Okay, if you look, almost every time it's kind of, shown some big buying, it comes back down, it builds, and it goes back up. Big buying comes back down, builds, it goes up. This stock can go to 1250 without any big bars. It doesn't need it because it keeps taking money at every single level. But when you go to a stock like PTON, if they took money at every single level, they're not going to get the percentage of people they need in there to actually crush them. There's no reason, if you have, let's say, 8% of retail, okay, that's in the stock on the push that you have, is it worth making a huge bar come down to take 8% of the 100?
No.
No, you got to get that up, right?
Right.
So what you're going to do is you're going to let it keep going, because the further a stock moves up, it's crazy sounding, but the more people that are interested. A stock can move $50, and you know how many people are interested at the 50? Is almost it's the highest percentage is interested at the highs, because they've missed it and they say, oh, I'm not going to take this because it's spread and that and blah 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 blah. And then usually after it moves up $50, what ends up happening? Well, you get a bar down for $25, and there's a reason for it. Okay, now, like I said, this is getting way advanced into things. But if you're ever gonna, go out there and you want to trade a lot of shares, this is how the thought process works. They'll give a false trigger. You know what a false trigger really is at the end of the day?
Just putting the carrot in front of them.
Well, so a lot of the times it is that, but there's also a lot of times that they just want to test interest. They just want to see what's the interest if I push the stock up here.
That's the whole ladder analogy. Is they're going to the next rung on the ladder to see who's still willing to go.
Exactly, that's it. So they literally put a trigger like that just to see, well, how many. So if a bunch of people come in, beautiful, let's go with the trade. If not, well, I know I need to build at a different spot. That's why the second time a trigger comes at the same spot, statistically, our trade goes up way higher in percentage, because if they do it a second time,
they already know what the interest there is,
exactly.
So they know.
Yeah. And why would they do it again when they already know? Now it's not testing; it's money time. That's why that second trade. That's why a failed flag. A failed flag is the same type of deal. You get a failed flag, it's a great move to come back up towards it, because in order to make a flag, you have to be buying. You have to be holding it up. You have to be putting in a position. That's why a bull flag is a bull flag, because it takes the buying to actually make that chart. So what happens is that if they don't have enough interest, here, and they don't have enough shares yet, what they do is they go, bam, they just drop it down. But the second time it comes up to that flag, statistically, our chances are way higher, because they already did it to them. Now, there's sometimes that maybe they didn't get the percentage they want the second time. Well, guess what? On the third time, I'm not missing it.
Right.
See how this works? It's really just judging what we see out there. And our next round of classes is all going to be prints. Okay, now we're going to go to trading. We're really, you guys, you understand for the most part, you guys all understand the foundation now. Now we're going to go into what these prints mean and what they're showing us, where retail is, where retail's not, what to look for, where to look for, so on and so forth. That's how you're going to become a great, but what we just went over today, I did not plan on whatsoever. But that's just how it works. It's literally just, what's my time worth? So I'm not going to make a stock move $5 unless I'm going to take a lot of percentage of retail. So if a stock's going to move $5, you got to think it like this. So I always, create these visuals. Okay, the livery car pulls up right in front of Goldman Sachs. Guy's beautiful suit, hair's all done, everything. He walks in, goes to his desk, he sits there, and he goes, "Okay, I'm moving PTON $5 today. I have to crush a lot of retail dreams. So I'm going to have to get this many retail traders who give me their money before I move it $5." And guess what? They walk in, the paper's in their inbox, and they say, okay, this guy wants it here, this guy wants it here, this guy wants it here. Is this enough retail for me to steal all their money from? Okay, it is. Beautiful. All right, so then we could just get the stock moving. Oh, it's not. Okay, well, what I'm going to do is I'm going to take the stock, I'm going to make it look like it's going over 160. I'm going to bring it all the way down to 155, make every person sell it here, and then I'm moving the stock. See how that mindset works? Because they need our money in order. They don't have all the shares. They need our money, and they need to know where our money is willing to go in. And once they figure that out, that's when it releases. Or not even when they figure it out, but when it hits that hot spot. Let's say they want 60% of retail that's watching. That's why they have all these crazy ass numbers and analysts and all that stuff that I personally, I'll never be smart enough to figure out. So you know what I do? I look right here and I go, okay, so all the research he did says I want to sell some at 165, and I follow it. That's it. Because if I had to think like that, that's, you got to be pretty smart. Making sense?
That's why they have a whole building of people to do that, not just one guy.
100%. Otherwise, I'd be exhausted at every second.
Yeah.
All right. Well, excellent break. This, you know what? I'm not going to give you an excellent. Not for nothing, but this was. You could have done this with your eyes closed. You pretty much did. But absolutely phenomenal question. So let's leave it up. Anyone have any questions left for everything that we've went over so far? This, by the way, guys, also it's a very easy stock to just look of how it works. But there was some intricate things that went into this that really are important to getting your mind to where it needs to be. After a huge pullback from our initial 161 aspirants, it came up and we got more 161 aspirants. Then a few aspirants at 162, 163, 163. Why do we not see a pullback from those all as well? You tell me. There's one word I'm looking for. Why did we not get the pullback? What happened? It's a word. Something happened at 161. Something happened at 161. Starts refreshing. Refreshing means money now, short time frame. So once it came back up and it pulled, it has to eventually pull back, but the move itself based off refreshing. Okay, once refreshing comes in, it tells us that we're going to be making money very soon. So that's why this whole move back to the upside was perfect. So once we broke past 161, if you notice, did they test their 161 again? No, because now they're actually up here working the stock. The stock is still going to have to pull back, but it becomes an exception at that point. If we didn't see the refreshing, would there have been another indicator that it would have been a shorter time frame? Volume problem, if I had to take a guess, and this is just a guess and from what you would normally see, volume more than likely would have been higher coming back up than it would have been as it went back down. Oh, 100%. I was just about to say that. Without the gap fill, I'm looking for 150 easily. Excuse me, not without the gap fill. Without the refreshing, our time frame means this stock is getting crushed. It's coming all the way back down here, guaranteed. So refreshing was our now signal, the second time average. So it wasn't our, so I don't want to say it wasn't our now signal. What it was it told us that once it got to where it needed to go, okay, our morning meeting, what was my number? Okay, it was 157.50 as a minimum, but it really was 155. Okay, I said it really should be, it should go over with that many prints. So once it gets into this area of that 155, you're talking about our low is 155.40 with a stock that has, a $10 range. Guess what? That's fine. Okay, coming into there, I know once it gets close to that 155, what am I looking for? My one immediately turns into a what? Number 4. It also the same thing at 157.50. Don't get me wrong. If this stock would have pulled up from there, that's okay too. But that was the minimum that we needed to go. So once we get the pullback we need, the pullback goes to a price. The pullback doesn't have time frame in it. Because if a stock needs to pull back $5, could it take 3 weeks for it to do that? Stock needs to pull back $5 before we could go up. Could it take? It happens. Guys, how many times have we seen it happen? Where a stock sits at 20 for 3 months. Been there. Sucks. Oxy took months to pull, but so we have to understand. So it's the number on a pullback. The time frame comes from the amount of prints, right? And the time frame also comes from variables like refreshing. So the time frame on the amount of prints told us that we could go all the way back to 90 if we wanted to, and that's a huge exaggeration, but you understand what I mean. But once we saw that refreshing, now we understand once it gets to the spot we're comfortable with it pulling back from, we're ready for game time. When it's money time, the pullbacks exist during money time. And I know the answer is yes, but someone's gonna be a smart ass. But when it's money time, minimal, perfect word. They're minimal because it's money time. Everything still needs to at some point take a breath, but being money time, it tells us we're ready to go. This is where those major psych levels are so important to anticipate. Jeez, 100%. That's why we look for them. Why are major psych levels so important to us? Why are major psych levels really so important to us? Who's there? Yeah, retail likes them. If retail likes them, market makers are there. If market makers are there, we can trade. That's why, how often, guys, do we see something act crazy and then it comes to a major psych level, around a major psych level, and it just changes? That's where they do it because that's where the most retail is. Okay, this market is going to change, and when I say this market is going to change, I've seen things I've never seen in the, and it's going to be over. It's either 10, 11, it's coming up maybe 12 years. I'm actually going to figure that out. But I've been doing this for a long time, and the market's done a lot of interesting things, and it's changed a lot. But that's why tape reading is so important, is because you can't change buying and selling. You can't change that market makers need retail's money to do things. You can't change it. So if it can't be changed, then guess what? What we watch and what we learn cannot be changed. Market makers know there will be interest there, so it's just a matter of how much interest there for them, and that's it. What percentage? And I know it's weird for, there's no such thing as 100% of retail, but that's kind of like the way that you have to think about it, is that if I know there's, let's say, 100,000 people sitting, within this stock, 100,000 retail, I know that I'm going to let the stock go when there's 60% or 70% or whatever. It comes down to a number. And they're too smart for me to know that, what that actual number is, but I can tell by their prints. And that's why we follow, because they do a lot of shit that I feel unnecessary, but if it didn't happen, then, the market wouldn't be what it is. Does this all make sense? Today's class went way more advanced than I wanted to, but at the same time, Andy, asked some really great questions. So you got to do gathering personality info. Sometimes they get overwhelmed with acquiring the different personality info. Do you have a suggestion on how to organize overall? Controlling print personality off level. Okay, so basically what you have to do is just like like what we talked about, is you have to break down what trumps other things. Okay, I don't care what you have. If you have controlling prints, do those trump everything else? Yes, of course. So now what do we do? Okay, what's more important, the daily personality or the minute personality? For us, minute. So what we see on the daily isn't as important as what we see on the minute. So really what happens is you get all these variables and you have to see which one trumps the other. All right, now we're getting more advanced, and that's going to be, Tracy, that's actually one of the first classes that we're having in our next round, is going to be how to delegate variables. Okay, because we know all the variables we need now. We know the personalities. Okay, we know how to read prints, hopefully, at this point. And now how to delegate variables is going to tell you, because there might be something that shows you great to the upside, but something that shows you bigger to the downside, a bigger percentage. So if the percentage is higher to the downside, even though there's a great one that shows to the upside, guess what's more important? What do we always follow no matter what? The higher percentage. Because the higher percentage is, it's percentages. You're going to be right a lot more of the time. All right, guys. Well, it's been a pleasure. Even though I feel great now, despite the voice, it's been a great class. I know we had to kind of push through it at some points just because of myself, but yeah, Andy, absolutely phenomenal job. You asked some questions that are way beyond your years, and they're really gonna help you kind of get more into there. But yeah, so that was another question I was going to ask. How do you guys like this breaking it into 3 weeks? Well, technically this is 4 weeks. But how does everyone like it? All right, so seems to be unanimous. Easier on my schedule with work, and that's a big thing. I just like the live part so much. Well, unfortunately, live is always going to be best. It's kind of weird that we've been doing this for this is the second week we went into this. I was talking by myself after you went off before, Andy, and it felt weird not talking to somebody and talking to chats instead. All right, guys, I hope you all learned something, at the least, and I will talk to everyone in Traders Exchange. Happy trading.